This is Mark Anthony with Mercury Time Price Analytics. Welcome to our end-of-day S&P futures trading video for Thursday, May 28th. It's been several weeks since we recorded a daily video. I've been dealing with a ruptured disc in my back. And absolutely no need to feel sorry for me. My wife was in a major car accident back in 2015 and had neck fusion surgery, 2 lower back surgeries, 2 knee surgeries. Had her neck in a brace for 3 months, I believe. Refused all pain medication. She literally flushed it down the toilet. So my bride is of 36 years as tough as nails, so I have nothing to complain about. But it's good to be back doing the videos again. What you see on the live chart, or what you see on your screen, pardon me, is the live chart with many of the tools that our subscribers see. This is our day trade algo. This is our swing trade algo, longer time frame. These are our day trade oscillators. I'm going to give you a close look at those in a few minutes. Our swing trade oscillators and some additional metrics. I want to start with a bigger picture. Since we haven't done a video here in several weeks, I want to share this screenshot for you. Now, this is the SPY, and what's important about this chart is this level that we're at right now. This is the high from July and September of 2019. Of course, we've had a tremendous rally from, what was it, 2177. And I posted this chart on Twitter yesterday, and what you see right now is an updated version of it. And for all the exuberance in yesterday's rally, and I mean, it was pretty tremendous. You went up, what, 90, 100 handles since yesterday's low of 29.65. Here's the important point. The futures used up a tremendous amount of energy to get back to this level. And yeah, it's been a monumental bear market rally, and it could go higher. The problem is, all this did was take you right back up yesterday to the high from July and September of 2019. Then you had an overshoot today, and this is the important point. It came right back down very quickly to this same point. So whether the market goes higher or lower from here, we'll see. But what's important is you're right back to this same level. And so we need to keep an eye on this. Now on the screen, the white dashed line is our intermediate cycle oscillator, and this is our long cycle oscillator. But this is a very important juncture for U.S. equity markets right now. And I don't want to get sidetracked, but let me just say this. Over the last year and a half, the percentage of the gain in the S&P 500 that's come from Apple, Microsoft, Facebook, and Google, and Amazon, if I didn't mention Amazon, the percentage of the gain from those handful of stocks is unlike anything I've seen in 35 years of trading. Here's the problem. We're coming into month end. Who wants to own those stocks who does not already own them? Yet Apple trade up to 322 today. Who wants to own Apple, Amazon, Facebook, Google, and Microsoft who does not already own them? And to a certain degree, it doesn't matter right now how much value rallies or airlines rally or this rallies or that rallies. If those handful of stocks that are overowned is a term you hear a lot in the market, but if those 5 stocks pull back just a little bit, it doesn't matter in terms of the S&P futures what the rest of the market does. It just doesn't. And so keep an eye on this chart. My Twitter handle is MC2085, or just search on Twitter for Mark Anthony or Mercury Time Price Analytics, and you'll find it. I think I've posted about 8 or 9 charts just this evening, and I haven't posted a lot on Twitter lately either because of this stupid back issue. But it's good to be back working the 18-hour days that I'm used to. But this is a really, really important juncture to keep an eye on. Something else I want to show you. This is something new that I've been working on, and that is to take. That was interesting. To take our proprietary oscillators and apply them to something that's not a financial instrument itself, and that is the S&P 500 advancing declining issues. And it was difficult to do because so much of our formula is based on time cycle dynamics. We have a proprietary time cycle dynamics engine that is nothing short of remarkable. But taking that engine and applying it to something that's a derivative of financial markets, but not a financial instrument itself, it was a little tricky, but I believe we nailed it. What you see on the chart here, the purple line is the longer cycle intermediate oscillator. The purple dashes are your pivots. The cyan line is the momentum algo, and then this white dashed line is the fast oscillator. And you can see where this after it broke down. And here's the thing about today's rally. Off yesterday's 2965 low, there were at least 3 buy programs that I could count, and there may have been more, but there were 3 very clear, identifiable buy programs off that 2965 low. We drifted higher today. Let's go back to the live chart. And we'll zoom this back a little bit to this morning. So you had this drift higher today. The problem was, and this is something I mentioned several times throughout the day on our live chart. On our live chart for our members, you not only get all the charts you see here and more. This is just a small sample. But you get audio too. I'm on the mic all day long and I never shut up. But I mentioned repeatedly that there was no program activity today. And as this was slowly grinding higher, the problem I had all day long was not only did we not see program activity like we did yesterday, but this was a problem. And that is the advanced decline line opened at positive 350, 355 on the S&P 500. Immediately after the open, you came down and it hit a low of around minus 145. So plus 350 to minus 145. That's a huge difference right off the open. Now, here's what got us short this afternoon. The advanced decline line came right up to this oscillator. These oscillators work, and a version of this has been available on our member live chart for several months. This version with all the other oscillators is something new. We've always had this fast oscillator on here. But I mentioned as we were coming up that if you're going to get a peak and a reversal today, it's going to come when the advanced decline line gets up to this white dashed oscillator. Bullseye. Now, what was brutal about the sell-off today, and let me say this, this selling here, that was not Aunt Mary and Uncle Bob that were selling. You had a high of 30.65, and then you came down to 30.20 in about 30 minutes. Now, you did get this reaction off 30.20. The futures came right back to 30.10, 30.12. But this is important. Now, remember what we got a couple of days ago in the afternoon. From 2 o'clock to 4 o'clock, there was no bid. And when you see that type of institutional selling, those are like cockroaches. If you see one, there are more coming. And you had that today. Now, the market did a really nice job of running stops all the way up into here. In that this last little pop at 65 and what, 65 and a quarter, that literally 62 was the target. And here's how important 3062 was today. Our algorithms use all the same time cycles that the institutional algorithms are based on. Institutional algorithms are based primarily on time cycles. They're not based on price. And if you watched any of our videos before, here's the point. You can't build a repeatable mathematic formula based on price. Here's the price axis. It's linear. Hypothetically, it starts at 0 and goes to infinity. You can't anchor anything to something that starts at 0 and goes to infinity. Just from a mathematical theoretical perspective, you cannot anchor anything repeatable to it. Now look at a clock. The clock is round. There's the same number of hours, minutes, and seconds in every day. There's the same number of hours, minutes, and seconds in every trading day, except for those days where we get half days and holiday shortened days and things like that. You have to anchor mathematical trading algorithms to time. Now, price is a factor in it, but the overwhelming majority of the institutional algorithms are based on time, not price. If you've read or studied anything from W.D. Gann, what did Gann say? Time is more important than price. In a larger picture, think of our entire universe. Numbers are a man-made construct, a human construct. Time precedes the invention of numbers. And so everything in the universe, in one way or another, is based on a construct of time. And so when people try to sell you trading systems or trading memberships or trading software, you know, they can backtest stuff and they can show you certain results at certain periods of time. But most of those things are not repeatable, and they won't be repeatable unless they are anchored to and built around time cycles. Now, where I'm going with this is one of the most important time cycles is what you see here. And I put a simple envelope channel on it. You can see where this peaked. This is the longest time cycle that the algorithms are based on, the institutional algorithms. That time cycle is, I'm not going to tell you exactly what it is, but it's well over 4 hours, put it that way. And it's very rare that you get moves up into an oversold level or an overbought level like today that push the limits of that algorithm. And that's what we got. We go over here to our day trading oscillators. I mean, you were up here in blue sky territory. The fastest oscillator on here, the one that's used primarily for day trading, is this dashed white one. There was nothing up here. There was nothing up there at all. And so it came back. Now, here's the thing. They'll ascribe some reason for it. And the reason they ascribed to today's sell-off was the fact that there was a news item that President Trump is going to address matters regarding China tomorrow. And that was the point that it sold off. Well, do you think for a minute the timing of that announcement was by chance? The timing of that announcement by the White House or their press corps or whoever released that announcement came precisely at the time that you reached maximum overbought on the longest algorithmic time cycle. There's a saying, and forgive me, I can't tell you definitively whether this quote is attributed to W.D. Gann or somebody else, but The maxim is the news breaks with the cycles. The news comes out based on the cycles, not the other way around. So at the end of the day on financial TV, they've got this obsession that they always have to ascribe what happened that day in one tagline on the chyron on the bottom of the TV screen. Has nothing to do with that. Has absolutely nothing to do with that. We reached maximum overbought up here into 62, and you had this couple handle overshoot because ES loves to run stops. But 3062 was maximum overbought on the longest institutional algorithmic cycle there is. And it could have been any news item. Widget prices have gone up. Sell the market. It doesn't matter. It doesn't matter. Now, you see a lot of stuff on the screen here, but we'll break this down to the basics. This purple pivot here on our swing trade cycle, this is what we call the matrix pivot, because the math of everything else revolves around this pivot. You can see what happened when this broke. You had one little move up higher to run stops, because that's one of the other things that ES trading algorithms are designed to do. They're designed to run your stops. Well, there weren't any more stops to run up here because you reached maximum overbought. But you can see what happened when you broke through the matrix pivot. You got this fast move down, 40 handles, in about 40 or so minutes. Now, prior to that happening, right in here, this was about 228, 230. Our day trading algo flipped short. That news came out here. Let me repeat that. Our day trading algorithm, built on the same exact time cycles that the institutional algos are built on, it flipped short here. The news came out here. And then you got this fast move down. Now, the problem is the technical damage that was done. Let me zoom back out a little bit. So the midday pivot, which we come out with between 12 and 12:30 Eastern Time, it's not based on where price is trading. It's based on a time price cycle formula. You go back to 12:30, we were up here. The algo pivot produced the level 4157. Now, after 1 o'clock, that's when we produce our long cycle afternoon pivot, 304156. So you have the midday pivot that comes out between 12 and 12:30. It varies a little bit depending upon some other metrics. But that midday pivot was 304157. And when the long cycle pivot comes out in the afternoon, there's only one time a day. That's how long this cycle is. There's only one time during the day session that this cycle rolls over. And it printed 1 penny because the algos, the way I designed the algos, they output to 2 decimals. I know ES doesn't trade 56 cents. But you got both of these key afternoon pivots that printed within 1 penny. So when you had this spike up, one of our new members, asked if I was still short, and I said, "Wait, the long cycle afternoon pivot is down here at the same price as the midday pivot." Well, at the time you're trading up here above 3060. And not only did you come down and break through that level at 3041, you broke through the daily bull-bear pivot, which, by the way, is produced over 90 minutes before the day session opens. So you broke the midday pivot. You broke the long cycle afternoon pivot. You broke through the daily bull-bear pivot. And you did all that technical damage in the span of, 40 minutes? Now, let's take a look. This is the day trade cycle oscillators live as I record this a little after 10 o'clock Eastern time. Let's go to this screenshot that was taken a little after 9 o'clock. So at that time, a little after 9 o'clock Eastern time tonight, you came down to this oscillator at 3012. Now that's a real important level to hold. Why? Because that's the price at which yesterday's blow-off, well, we don't know yet if it's a blow-off move. It may still go higher than that. But yesterday's impulse move in the afternoon, the price at which it started was right here at 3013. You came up to about 3018. You came down to 3012, 3013, and that's where it took off. That's right back where you're at now. And going back to that SPY chart, you're right back down. So, you know, is there a reason for exuberance? I don't know. But we're right back to the July and September high. So the July and September high, SPY, 3026, if you want to equate it to the S&P futures. We printed an all-time high of 3397. So you went up to 33.9, and again, this is 302.63 SPY. Same thing as 3026 in the ES futures. So this is your high in July, 3026. You went up and printed 33.97. You came down to 21.77, I believe. What happens to support after it breaks? It becomes resistance. So you're right back up here to resistance at 30.26. You had a little overshoot today. Big deal. Now, can it still go higher? All the CTAs are piled in now 100% long. I'm not even going to get started on that. The CTAs are buying the highs. They're selling the lows. CTAs have made a lot of money for a long, long time, and they're very talented people. But I don't believe that system of momentum piling in at the highs and shorting the lows is going to work in the backdrop of a global pandemic. There is no precedent for what we're seeing right now. So back to the live chart, just to give you one more look at this. So you held here at 3012. Now, these white oscillators are the short cycle oscillators. This long dashed white one is the fastest, and then as they get sequentially longer in time cycle, you have the solid white line, the dotted white line. These orange oscillators are trend oscillators. So you came down here and you broke the multi-day trend. Now, this purple oscillator is what I call an acceleration oscillator. When price comes from a long way down into these, you tend to get a reaction in the opposite direction, and it'd be no different than if price had come a long way up into one of these. You'll get a reflexive move, and right now all it's done is come right back to this trend oscillator. And what this acceleration oscillator or acceleration pivot, what this is, the way this acts, is as a waypoint between these two trend oscillators. And so what will happen is, in the case of it coming down into it, it'll hold the first time. You'll get a reflexive move higher. This comes down to it again. If this breaks, then you get the acceleration again down to 3004-ish. And look, you break the roundy into month end. And I'm not predicting we're going to go a whole lot lower. I mean, we'll trade the market the way we'll trade the market with what it gives us. But I want to mention something else. If you trade for a living or you're trading just to make money, You probably have a TV near your computer, and you probably have one of the three major financial channels on. Turn the sound off. I mean, personally, most of the day I watch Bloomberg, so out of the corner of my eye I can see if there's a headline. But trade with the sound off. And let me tell you why. There are some very good folks that very knowledgeable, excellent traders, excellent financial advisors that come on those channels. But there are also a lot of folks who are trying to sell you something. Now, anytime the market is down going into month end or quarter end, what do you hear? Well, there's going to be month end or quarter end rebalancing into equities. You've come right back 800, 900, whatever handles it is, simply come back to the July and September high. So what was it, 2177? So massive move higher. Has anyone on financial TV said, well, you know what, this market is extraordinarily overbought. We believe there's going to be portfolio rebalancing in a month end out of equities? Has anyone said that to you? No. Now, that doesn't mean we're going lower. But it doesn't mean that I'd recommend piling into longs right now. And let me just say this, and I would love to be positive, but June is going to bring pain. This is the calm before the storm. I hope I'm wrong, but I believe June will bring a wave of corporate bankruptcies unlike anything that we've ever seen before. And Fed Chairman Jerome Powell is speaking tomorrow at 11 a.m. Maybe he's going to have some pixie dust in a month end. Who knows? But I believe that the pain trade in June is lower. So if you haven't been to our website, it's mercurysignals.com. Right now we're running the lowest subscription rate that we've ever run. It's scheduled to expire. I'd have to check the date, but it's going to expire pretty soon, and then rates will be going back up. So please check out our website. I don't believe there's any value in a trading service like what we offer for the price. Let me close with this. My wife and I have 4 children. This is a difficult time in our country. It's a difficult time globally. There's a lot of folks that are very, very lonely right now. And I don't care how positive your outlook is, how positive you are on a day-to-day basis. We've all experienced some psychological or mood issues regarding what's happening right now. When you're sitting at your desk, or you're at your office, or you're in your home, God's there. You're driving in your car, God's there. You're out at the ball game, which we hope will happen again soon, or you're in the park, or you're in the grocery store, God is there. And if you heard nothing else I said tonight, please remember this. You may feel lonely, but you're never alone. God is there for you, and He loves you. And He wants to help you through this time. So I hope you'll think about that. As always, we appreciate your time. Most importantly, God bless you. God bless your family. We hope to see you again soon.